Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap session for Thursday, December the 29th, 2016. My name is Doug McKay. I'm the founder of Quantum Leap Futures. Each morning we get together and take care of our trade plan for the day. We take a look at the market, macro and micro, look at the structure of the market, then we drill down to the trade levels, the targets, and the hypotheses for the day. We create multiple hypotheses in order to have a plan in place for what the market throws at us. Then we can identify what the market is doing and see which of our plans best fit our trading. Please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results. Any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. Okay, taking a look at the news for the day, we just had unemployment claims come out. It was a slight beat. Expected 277, came out at 265. The market yawned. Good trade balance came out slightly less than expected, minus 65.3 versus minus 61.5. And prelim wholesale inventories came out at 0.9 versus 0.1. Yeah, kind of mixed, but I thought we would have had a better reaction to the jobs. It wasn't a huge beat, but it was a beat. Anyway, 10:30 we've got natural gas, and then the key one will be today at 11, which is crude oil inventories, which is 30 minutes later than what is normally done. So just keep in mind that at 11 o'clock will be the next big news coming up today. Yesterday, well, we had a trend day down. Our main hypothesis was a open auction in range, a move down into the 64 to 62 area, and then rotation up. Our hypothesis 2 was a rotational day, and hypo 3 was a trend day down. And hypo 3 was a failure to break out of value or out of range, come down to the range low, fail at the range low, move down to the 56, 57 area, chop in the microcomposite VPOC, then fail and come down and target this 41 and a quarter. We didn't quite get there. We only got to 43.50, but we did close on the low. So we were expecting overnight to come down into the 41 area. They didn't quite get there. They got down to the 42 and a quarter. That completed the zipper measured move. Primary target that we had, the earlier one, the extended target on that zipper measured move was 42.75. We still have this measured move in play right now. The one that started here at 58 and a quarter. It's got the primary target down at the 40 and a quarter, and the extended target down here in the 36. But let's not get ahead of ourselves. Let's just take a step back and take a look at the macro to the micro. I always start my day with a simple candlestick chart and a 9 EMA and a 20 SMA. I'm looking for slope and separation. I'm looking for where the trend is being violated. So looking at the monthly, very strong upward trend for multi-year, then challenged at the end of 15, beginning of 16, but then they took it back. Then we had this falling 3 pattern that we were watching last month for continuation. We got the continuation, put a new time high in, and we are in a trend on the monthly. It does not even get challenged until we get below the 2149.03. It's a long way away, so it's really not a factor today. Taking a look at the weekly, we did have a inside Mr. Sneaky last week, and we now have a bearish engulfing week going so far. A move to the 9 EMA is going to take us down to 2217 area. I'm watching the 2219.50. That's probably where the 9 EMA will be if we come down in the next 3 or 4 sessions. That 2219.50 is the 50% of the significant breakout candle. We'll go to, that's 50% of this particular candle right here, which was the breakout day on the 7th of December. On the daily, we have come down and we're challenging the trend. We've got the 20 SMA at 22.42 1/4. We've come down there and tested it, and we've bounced so far. But right now, we do have a possible challenge to the trend, but we can just as easily bounce from here. And I'm really watching that 22.40 1/4, which is the key line in the sand. And if we bounce from there, we could just get a continuation of the trend. But the trend itself on the daily is being challenged right now. It hasn't been violated, but it has been challenged. We're below the 9 and testing the 20. Going to the 4-hour, you can see, sorry, you can see that we have a huge downward trend over the course of the RTH session, and a little bit of continuation in the Globex, but basically we're in a consolidation mode right now, and a move up to test the 9 from below will take us up to the 22.50. Now I'm watching the 22.51 and 22.51 for a couple different reasons. Our week low from last week, and it's the LVN from the trend day. We do have a naked cross that we put in on the trend day down up at 22.59.50. Mark that on your journal. That's going to be important if we get above the 9 or the 20 SMA at 22.56.75. That would be what I'd be targeting there. Even starting to look at it if we get above the 51, and I'll show you why in a minute. Going to the 1 hour, you see that we have a strong trend down, but now we've got consolidation, and we're trying to violate the downward trend right now and try and hold above the 9 and the 20. Again, there's a naked cross up here at 64 as well. Going to the 30-minute, you can see we had strong downward trend, but again, sideways consolidation, and trying to determine if we get a continuation pattern or we get a reversal pattern and start the trend back up. Going to the 15-minute, you can see that we've started to move up. We came down, tested the 20 from above, got continuation, but now we're stalling out and going sideways. But we are above the 20, but below the 9. And watch for us if we get above the 46, 47. I'm looking at the Globex high, which is right now at, I think, 47 1/4. We'll take a look at it in a minute. But overall, we're starting a possible upward trend, but it's weak right now. And going to the 5, you can see that it is weak, that we have a possibility of continuation of a trend down, but we're in a solid sideways consolidation and just chopping around. So taking a look at the big structure, big picture structure, we had the gap up day, the breakout day, and then we moved up and created this balance that we've been in for the last 2, 4, 6, 8, 10, 12 days. And on the 13th day, they come down and we have a bearish engulfing, and basically took back, almost 12 days of in Globex overnight. They did come down to the 42.50, so they took back 12 days of balance and slightly upward skew. The microcomposite VPOC still remains at 57, so I'm watching the 51. I talked about the 51. At 51.75 is the microcomposite value area low. It also happens to be the one tick above last week's low, which was 51.50, and you've got the VWAP and the LVN from this lower distribution. We get into this thin distribution above the 51. So anywhere from 51 to 52, I'm watching. That's going to be a major trade area for me today, because if we get above it, I'm targeting where the VPOC was most of the day yesterday until it got stolen into the close. But I'll really be targeting back to the balance overall at 57 area. So we've got the 55 area, and then we've got the 57 area if we can break above the 51. And that's really going to be to what I would consider not a real strong, but a pretty key line in the sand above. So I think if we can get above 51, that will actually get some continuation up. So I'm going to put this in as our key line above. Okay, and then of course we've got the 40.75 and this 41.42 area that is major, because if we get below that, we're getting outside of balance. We'll be below this balance at 42.50, and we're in this thin area of the profile, and it wouldn't take much to make a trip through here, because there's no support here. That's the first support comes in all the way down here at 34, and then we've got a measured move. Remember, our extended measured move on this current zipper down at 36. So we've got some targets down in the 36 and the 34 range. And then, of course, we've got the VPOC from that breakout day at 27, and then the significant 50% of the significant breakout is all the way down here at 1950. And it wouldn't take much for us to get down there if we cannot hold 40.75. So I'm going to be using that 40.75, 40.25 area still as my key line in the sand. It's not our daily downside target. So I'm using the 40.25 rather than the 40.75 because of the measured move. Okay, so taking a look at the overnight session. The overnight session high was 47.75. Our overnight session low was the 42.25. We missed that naked close by one tick, although it wouldn't have mattered in the Globex because it has to be taken out in the RTH. And then I doubt that our VPOC is going to change 46.50. You can see that inventory is pretty balanced, but it's neutral to net short right now. For inventory overnight, kind of a P-shaped profile, which is some short covering, which I'm sure was going on. We have the value area low in the midpoint is 45, which is sitting right on top of yesterday's VPOC. Remember, we stole the VPOC into the close. It shifted after being a trend day down. It shifted down to 45 in the last 15 minutes on the close. Of course, a key level is going to be the low of the day and the value area. And the value area doesn't mean much because it was a trend day. but we do have a weak low, this double bottom at 43.50. So I'm going to be using 43.50 because below 43.50, I'm looking for them to take out the overnight low, and I put that in wrong. I'm looking for them to take out the overnight low at 42.25 and come down and tag these naked VPOCs and naked crosses down here, and then test the key line in the sand at 40.75, and I'm expanding that down to 40.25 because of the zipper measured move. That zipper measured move does not get violated until we get back above this 58.25. And you can see that the pivot point for the day, the full session, is the floor pivot is 52.25, which is just above that 51.50 area and 51.75. So a bit of a cluster there at the 51 and 52 area. So just be careful. Don't be overly aggressive. Wait for them to break, then come back and test it from above if you're going to get long. And if you're going to get short, make sure you're getting short below the 51.50 area, on a retest. So just be careful. We're flattening out here. This could be a basing pattern, so we have to be cognizant of that fact. The Keltner has gone horizontal right now. We are stair-stepping down, so I am looking for the possibility of continuation. The caveat to that is we've got 2 days left of trading for the year, and I still think there's going to be a fight here and possibility of of a move up to try to get close to the year. Now, taking a look at the ranges, right now our 20-period ATR target, our ATR, 20-period full session daily, is running at 1728. It expanded it out after starting to contract for numerous days in December. It kept on contracting. What do we look for when the ATR is shrinking? We're looking for the possibility of a breakout day. We've got the breakout day, and we expanded our daily ATR to 1728. So off of the overnight high so far of 47.75, our downside ATR target is going to be 30. What's that, right? 47.75, 1728 is going to be 30.50. That's just below this this naked close here at 31, and just below that next big target below. Next big target below is 34. I should say next big target below the 41, which is currently our key target below. Come on, Doug. I just erased that mistakenly. Okay, and then I want to just talk about critical mass for a minute, because we are coming into the market. Our month open, okay, is 2194. 2194, minus where we're trading right now, which is 2246. 2246 minus 2194. So that's 52 points, that we would need to trade in order to get down to the month open. So regardless of what happens, we're sitting right now in what I would consider to be critical mass, because if you take 2194, and we've got 2 days of trading, and our currently daily ATR is running at 1728. Our critical mass right now for the month, okay, is down here in the 2228 area. So as long as we stay above 22.28 today, 22.28, what am I doing? As long as we stay above this, we're in critical mass. So what does that mean? Does it mean that we're just going to rip to the high side? No. What it means is that until we get below 22.28, there's little hope for the bears to get the month below the month open. So we are most likely going to get a bullish month, and at some point in time the sellers could go away because there's no way that they can get down to the month, and that's critical, basically what the critical mass means. So we're looking for capitulation of the sellers for a possible stronger move up. Now, we're way above critical mass, so I don't think that it's going to be as big of a factor as if we were trading down in the 2220s and we had an opportunity still of going down. But we'd have to have at least, basically 4 days left with this much ATR in order to get back down to the 2194 month open. Okay, so I'm being long-winded again. Got to get quicker at this. Just like to explain everything, as I go through this. So taking a look at our hypothesis for the day and our trade levels. So key trade level is obviously going to be the key line in the sand again. And why do I keep doing this? And we're going to be opening up inside of the lower distribution of a trend day. So my main hypothesis is a open auction in range, a move up, take out the overnight high, come up and test the 51 area, and I'm looking for failure up here, and a rotation down through the lower distribution, chop at the low, come down here and take out the 41.75 and test the key line in the sand. Then I expect to fight this and rotate, okay, push through down into that 34 and chop between the 34 and the 40.25 as we just chop around into the close. That is hypo 1. So hypo 1, open auction in range, push up, failed to get above the VWAP and the key line in the sand or a false breakout, and then rotate back down into the 41.75, which would be the main target, push down to the 40.25 and chop and push down into the 34 and 36, but chop around down here and go sideways. Why? Because we still have the zipper measured move, okay, that takes us down into the 40.25 and the 36. So the 40.25 is the primary and 36 is the extended. I wouldn't expect there to be a lot of strong selling, today. Hypo 2 is an open auction in range, a push down into the 40, take out the overnight low, take out and they could close and they could VPOC, come down and find responsive sellers here at the 40.25 and then rotate us back up into the 51, chop in the 51, and then push up and come up into the 57 and come up into balance. Taking a look at our daily ATR off of the overnight low of 42.25 plus 1728, our upside daily ATR target takes us to 59. Is our upside daily target? I guess I don't have, I erased it. So 59.50. And then off of the 47.75, our daily downside ATR target is 40.47, 40.50. That can't be right. That can't be right. Sorry, hold on a second. 47.75 minus 17.28. 30.50. I guess I had that down there already. All right, so we do have range capabilities down to 30.50 and up to 59. So Hypo 2, open auction, in range, push up. Hypo 2 is open auction, in range, move down to the 40.25, then rotate up and take us up through 51 up into the 57 area. Hypo 3 is a continuation day, an open auction, in range, failure to get above the 51 but come down strong into the 40, fail at the 40, and then push through and come down into the 30. And I'll be targeting the 30, 50, 31.25 area as a continuation day and a move back into this thin area of the possibly even down to this naked VPOC down here at 27. So that is Hypo 3. And then Hypo 4 is an open auction in range, leaving the naked VPOC and naked close alone, rotate up into the 51 area, chop here, push through up into the 57, chop in the 57, 55 area, push and come up and take back this whole day and come up and test this 69.50 area. So that is Hypo 4. So those are my 4 main hypotheses. Sorry I ran late again, but a lot of stuff to cover. Anyway, as always, trade safe, trade well, trade safe, and we'll catch you on the flip side.